Welcome back to Smart Investing Insights. Today, we're cutting through the noise to explore the most strategic ways to grow your wealth in 2025. No hype, just actionable strategies backed by data. Whether you're a seasoned investor or just starting out, this guide will help you build a resilient portfolio tailored for the future. Let's dive in. First, let's talk about the cornerstone of any portfolio: diversified index funds and ETFs. These vehicles spread your risk across hundreds of companies, mirroring benchmarks like the S&P 500. Why are they a top pick for 2025? Historically, index funds have delivered a 7 to 10% annual returns, outpicking most actively managed funds. In 2025, as global markets stabilize post-pandemic and adapt to automation, broad market ETFs offer exposure to growth without betting on single stocks. Risks. Market downturns affect everyone. Mitigate this by dollar-cost averaging, investing fixed amounts regularly to smooth out volatility. Platforms like Vanguard or Fidelity make this accessible with low fees. Next, real estate. While buying physical property isn't feasible for everyone, REITs, real estate investment trusts, let you invest in commercial or residential properties without the hassle. In 2025, urbanization trends and remote work reshaping city demand could boost niche markets like logistics warehouses or suburban housing. REITs like Prologis or digital platforms like Fundrise offer liquidity and dividends. Risks. Interest rate hikes can lower REIT valuations. Balance your portfolio with shorter duration REITs and focus on sectors with strong fundamentals. Now, let's discuss technology. By 2025, AI and renewable energy are projected to dominate. Companies leading in AI infrastructure, think NVIDIA and cloud providers, and clean energy, next era energy, Tesla's solar ventures, will likely thrive as global decarbonization deadlines loom. But tread carefully. Tech sectors can be volatile. Diversify within the sector. Avoid overconcentration in one company. Consider ETFs like ICLN for renewables or bots for robotics, AI to spread exposure. Don't overlook bonds. With potential economic slowdowns, high-quality corporate or government bonds provide stability. In 2025, rising interest rates may offer better yields. Short-term treasuries or TIPS, Treasury inflation-protected securities, can hedge against inflation. Risks? Long-term bonds suffer when rates rise. Stick to shorter durations and ladder your bonds to reinvest as rates climb. Emerging markets like India, Vietnam, and parts of Africa could see explosive growth in 2025, driven by tech adoption and young populations. ETFs like EEM or country-specific funds offer entry points. Caution: political instability and currency fluctuations are real. Allocate only 5 to 10% of your portfolio here and pair with stable developed market investments. ESG, environmental, social, governance. Investing isn't just a trend, it's becoming a mandate. By 2025, regulations and consumer demand will push companies to adopt sustainable practices. ETFs like ESGU or VSGX track firms with strong ESG metrics. Risk: greenwashing. Research funds thoroughly. Look for third-party certifications like MSCI ratings. Gold and silver remain timeless hedges against inflation and geopolitical chaos.
Allocate 5 to 10% to metals via ETFs, GLD, or physical holdings. Remember, metals don't generate income. Use them as insurance, not growth drivers. Finally, educate yourself. Markets evolve, and 2025 will bring new challenges. Use tools like robo-advisors, Betterment, Wealthfront to automate allocations, but stay informed. Your plan: assess risk tolerance, diversify across asset classes, rebalance annually. Investing in 2025 isn't about chasing trends. It's about disciplined, diversified strategies. Start today, stay patient, and let compound growth work its magic. Want a step-by-step portfolio template? Download our free guide in the description. Don't forget to subscribe for actionable insights every week. Here's to your financial future.